On today's Hot Sheet, I'm discussing this past week's housing inventory update. Are we normalizing finally? Federal land use and Trump's first initiative on increasing inventory across the country, as well as existing home sales from NAR. That report released last week. And there are some misleading headlines associated with it. I'll break it all down. Today is Monday, March 24th, 2025. I am Byron Lazine, and the Hot Sheet starts now. Good morning and welcome into the Hot Sheet. Let me know in the live chat, wherever you may be, which market you are tuning in from live today as we start another week here on the Hot Sheet. It's the only housing show live on the internet every single Monday through Thursday when the markets are open, 9:30 on the East, 6:30 on the West. The simple and free way to support everything that we're doing at BAM. If you're enjoying the Hot Sheet, if you're getting value out of it, would be to just subscribe to the YouTube channel right below, subscribe, hit the notification bell, and consider sharing the Hot Sheet with someone else who can benefit from this 24-hour look back on housing that we get to enjoy each and every single morning together. All right. We've got inventory. Is it finally starting to normalize? Trump is moving forward with some of this federal land discussion in the campaign. I mean, when it first was mentioned about the federal land discussion, I'm like, they're just never going to get to that. That's just like one of those things you throw in a campaign. I guess they're taking the steps to get to that. We'll break that down. Existing home sales. There's been some interesting headlines on that. I'll tell you where those headlines are wrong and where there is hope for increasing existing home sales moving forward. All right, first, let's dive right into the inventory, national single family inventory here for the past week. We're looking for significant increases. We're looking to normalize single family inventory. There's only a couple of ways we can get home prices affordable. And if inventory remains at the levels we've seen the last couple of years, it's going to be harder to get there, even with the demand that we have on buy side, which is pretty low, right? If we look at, while mortgage application demand has been improving this year and it's been increasing, we're talking about bottoms that we haven't seen since 1995 on mortgage application data. So we are improving right now in some of this shorter term data. But when we look at the last couple of years, we've had really low demand, a real estate recession, suppressed activity. All of that is true. And so despite that, home prices continue to go up because inventory has been obviously locked up. But, and I'll get this on the screen here shortly so I don't show you guys a black screen. Those of you that can see it, I'll walk you through on the audio side here for those that are only able to listen. Weekly inventory is really starting to show signs that we could get back to a normal pace of active inventory. I think what would help the most with that is if we get to a level of, a 30-year fixed interest rate that unlocks more of these would-be sellers. Now they're going to be buying on the other side. Nobody's going to sell to be homeless, but you're just going to get more movement in the market, more things coming onto the market. I think that would help the most. But we're seeing as the rate starts to free up and just time starts to wear on some of these would-be sellers and life and all of that happens, you are starting to see this increase that we've been waiting for, really the better part of the last 3 years. A week ago, we were sitting at 655,000 on active single family inventory. Right now, a week later, we're at 668,000, just above that mark. This is 30% more than last year, where we only saw a week over week gain in the same week comparison, that March 14-15 to March 21-22 timeframe of about 5,000 last year. So we saw 13,000 pop. It's almost 3-to-1 on the increase now. As you get into March, if we just go back to 2019, when we started March, we were at 819,000 single family homes. I get it, significantly more than where we're at right now, about 150,000 more than where we are right now. But we started March of 2019, the last, what we would consider normal market before 2020 really changed the game on everything, but we started at 819,000. Let's call it 820 for round numbers in the beginning of March 2019. Well, we ended March up 836. So we saw movement up. Once we got into April at 840,000, by the end of April, we were at 892,000, beginning May in 900. So this time period, March, really starts the momentum moving forward. It starts to budge off of what is typically flat on active listings in January and February. And March, historically will start to move the train. It will start to just kind of come off the tracks, so to speak, in March. And then you get the momentum building in April, May, June, July. That's when you really see this active for sale inventory increase. And this is why the later you wait in the spring as a seller, you're just going to simply have more competition. You might have, flowers that are popping and nicer grass, and better weather days for your buyers, but you're going to have a whole heck of a lot of competition because sellers are thinking the same. They're waiting, they're letting the year play out. And sometimes those that go on in the end of the spring market, it's just too late if their number one goal is capitalizing on top tier price. This is why just last week, I'll jump into BAMX members. This is why I was talking about this so much last week, but I'll jump into school where our BAMX members have access to daily hot sheet data. I'm actually in the hot sheet one, but if I go out and I go into the classroom section here on school, by the way, anybody can get access to this by becoming a BAMX member, school.com/BAMX. If I go to new this week and I just go to last week's content, we drop content for you that you can edit and personalize yourself. You can customize all of this content for your social each and every single week. But we actually, I was working with our creative designer, Jill. I was like, I've been talking about this on the hot sheet. We need something that's perfect for social, that really tells the story of why right now is the best time to sell. This highest views per listing, lowest quantity of listings, it's all happening right now. The end of the spring, right? You start to see these numbers skyrocket June and July. More competition, the lowest views, that's all happening come the end of spring and throughout the rest of the year. Now is truly the time to take advantage. And so we dropped that chart. I already see it going around social in some local markets for you to be able to use inside of BAMX. We also put that right into a blog, right? So if you want to write a blog or if you want to use the newsletter component here, all of that information, newsletter and blogging, is available for you to be able to just use that data inside of BAMX. So I talked about it a lot last week. And when we look at the data right now on inventory, you're starting to get, a seller is starting to get behind the eight ball. You're going to be able to pull this data for your local market and tell a local story. But local markets typically will that trend line I just showed you on the social graph inside of BAMX, or this one here where we're looking at Altos research that shows us the national trend of inventory. Your local market tends to follow this to some degree, maybe a month off here or there. But you can pull this for your local data, for your local market quite easily. We're now in the time frame of the year where the active inventory is going to start to move up and peak out somewhere in the summer months. But the rest of the spring is the time when the market starts to accumulate more and more and more competition. I want to be out on the market now, certainly by the beginning of April. If I'm looking to maximize price, if I want the most money, I want the most competition, I want the most eyeballs as a seller, I'm doing it now. Then the data backs it up, and you can go back as many years as you want. Take 2020, throw it out, because 2020 and 2022 with the interest rate, you got to adjust for some of that. But if you just go back 25 years, adjust for the great financial crisis, that type of thing. The great financial crisis, you were seeing, it's such an outlier. You're seeing new listings in the peak season of the spring hit 250,000 to 400,000 new listings per week during the recovery. Right now, we're just trying to get to 80. Now we've seen improvements on this. Here's the new single family listing. So we just looked at inventory. That's cumulative inventory on the market. And this is new listings coming on the market. And last week we saw almost 70,000. We're trying to break 80,000 here in the peak spring market. That's a Logan Motoshami number. By the way, little secret for you guys. Logan Motoshami, Housing Wire. He was just on Squawk Box CNBC last week. This week, he's coming on Knowledge Brokers podcast on Friday. So make sure I'll have Haley drop in the link for Knowledge Brokers podcast, separate YouTube channel, separate Apple, separate Spotify. If you're listening to this, it's going to be obviously a separate channel. Just look up Knowledge Brokers podcast. Go ahead and make sure that you're subscribed to that. We've got Logan coming on this Friday. Just a little secret between the hot sheet people as you guys get the information first here before I tell anybody else. So 69,000 on new single family listings right now. We've seen, 3-4 weeks now, 5. We've really seen a good year on new listings. Now we're coming off of a 2-year low, and we're hoping to get over 80,000. So that's where we're at right now. 69,000 last year, same week, we were at 60,000. So we had a 10,000 bump in 1 week here. When you're looking, apple to apple, 2023, we were only at 49,000, 50,000. So, the last couple of years, the accumulation of just really low listings, has created an environment where we've got really low sales, suppressed sales. We're going to talk about existing home sales, a little bit later. And we're going to talk about, some of the, some of the things that might start to bump these numbers up and where rates might be going. A percent of properties with recent price reductions. Okay, we've got 34.3%. You typically see about a third. So we're trending a little bit higher than normal. Now we also have a little bit higher than normal average price. We have the highest average price point and median price points, generally speaking, that we've ever seen. So you're definitely getting pressure on pricing until that rate comes down and people can afford more. You probably continue to see that pressure. 34.3% is moving up right now. You typically will see this, last year it moved up throughout the spring. If we're just comparing to 2023, you actually saw it moving down at this time of year. 2022, it skyrocketed up, obviously, because rates were moving up. We're moving up right now at 34.3%. Last year we're closer to 31% on this number. So sellers that need to sell are getting a little bit more, aggressive with those prices. Remember, last year the inventory was generated in 24, 40% of it by Texas and Florida. So some of these reductions might here early on this year, quarter one coming to a close here in about a week. What we might be seeing so far this year is a lot of those reductions might be driven primarily by those higher inventory markets. Don't have that necessarily broken up, exactly to reflect that. That is just a total guess. All right. There you go. There's your inventory update. I'll show pending sales here quickly. The gap is starting to close a little bit on homes in contract. We're at 346,000 plus homes in contract for last week. The year prior, so if we're looking at year over year, 356,000. So we're kind of running flat now. We've seen a negative number here throughout the year. Existing home sales, which we're going to get into, is kind of, big in the news, but we're still seeing enough pending home sale data that tells us maybe some of that future, data is going to look a lot like last year, a little bit of what Lance Lambert said. We're not seeing a big bump here on pending home sales. In fact, we're down 10,000. So right now, when we look at pending home sales and we just kind of project out into the future on sales, it's looking a lot like last year. We'll see, kind of what continues to happen with rates. Mortgage purchase application data has been looking good. So this could tell us, something about the next 60, 90 days, the mortgage purchase application data, being positive for readings so far this year. And these are week over week and year over year. I mean, if we look at year over year, we've had a whole bunch of year-over-year positive readings. And then we've had a whole bunch of, so far this year, we've had 4 positive readings week over week. So we're starting to see signs, especially the last 3 weeks, that this mortgage purchase application index is telling us that, hey, in the next 60, 90 days, we could see more sales. Okay. This is one of those leading indicators. It's not telling us the whole story, but it's giving us an indication. It's giving us kind of a window of hope that, yeah, in 60, 90 days forward looking, we could see more sales than what you would expect at the end of the spring market. There's no guarantees in that. We know historically, the bulk of the under contracts are going to happen here in the next, 6 weeks or so. A lot of times March is kind of peak for sales. Logan over at Housing Wire, we'll talk to him about this on Friday, hasn't called this year's peak yet. So it happens a lot in March, hasn't called it. So because of some of this forward-looking data, that there is a chance if the rate continues to move down towards 6, it's something that the administration is pushing hard for lower mortgage rates. The data that they're getting, the administration, the Trump administration, is that people care about housing more than they care about their Amazon and Meta stock. The citizens right now want to be able to afford a house. That's what their surveys are telling them. And they're talking about the 30-year fixed mortgage a lot, right? They're putting pressure on Jerome Powell and the FOMC to get rates down. They want to do everything they can. And this is why you're seeing, they're thankful the 10-year is going down. This is helpful to the administration because if existing home sales go up with the rate getting closer to 6%, then you're going to see a Trump administration basically check the board for a W. You see home sales go up. If you see things like gasoline go down, which has been happening, then you're going to see a W. Now, Jerome Powell and the Fed don't care about that. That's not something that Jerome Powell and the Fed care about too much is home. In fact, they don't care about home ownership at all, or house prices at all, or if existing home sales go up. They care about 2 things. Their dual mandate has been very clear. They say it over and over again. It's get inflation down to 2%. There's some guy from New Zealand that made up that number decades ago. It's an arbitrary number. Nobody in America came up with it. Somebody in New Zealand came up with 2% inflation as the target, and we've been running with it ever since. So 2% inflation, and then maximize employment. So they'll give up some of the inflation fight if unemployment moves up. Okay, unemployment moving up a little bit, you'd see that the Fed would react. It wouldn't upset, I don't believe, the administration. In fact, they're in the process of a whole bunch of, federal layoffs. And there's some, I would even call it maybe conspiracy theories out there. That's like, they want to drive a little bit of this, a little bit, not out of control, not recessionary terms, but unemployment up a little bit because we know it's going to drive down the 10-year. We know it's that then is going to drive down the rates. So, there's some forward-looking positive data if the rates continue to move down. And so for all of the uncertainty, next week being, I think it's called Liberation Day in America, April 2nd, with the tariffs kicking in, with all of the uncertainty on tariffs right now, and what they're going to create, you are seeing that uncertainty help housing. And again, this is something the administration wants to see is existing home sales go up. And listen, they also want to see stuff like this. Look at this announcement here. You think this has to do with tariffs? I would say it does. South Korea's Hyundai to announce $20 billion U.S. investment. So if you're in Louisiana, I'd be green screening this. You got a $5 billion steel plant coming to Louisiana. This is going to be announced today, 1,500 plus employees. And you're going to have the Hyundai chairman and all of that. That's going to be one of those things that if you see more and more of that, $20 billion investment in the U.S. is significant, obviously. If you see more and more of that, then you can start to put the dots together that, hey, tariffs are maybe benefiting. There's a lot that needs to play out. But clearly the administration wants to get some wins with the American people early on here. And one of those wins from what they're seeing from their data is going to be around housing. So they are now following through with one of their promises in the campaign. Realtor.com has a story about this. We're going to break it down, and they've also posted it on their IG. The Trump administration has taken the first step now towards opening federal land for housing development. The federal government owns 27% of the land. Okay, so let me just make sure that I'm giving you that number correctly. It's 27% in my memory bank here on from the reading that I've been doing. I just want to make sure that I'm saying it right. They own 1 million square miles of land, which is 20% of the country's total land area. Okay, so 1 million square miles the federal government owns. Okay, there's this initiative here that the Trump administration, Department of Interior Secretary Doug Burgum and Housing and Urban Development Secretary Scott Turner announced a new joint task force that will begin identifying federal land that is suitable for housing development. Out of that 1 million square miles of land, or 20% of the country's total land area, this new initiative that they're focused on, Turner and Burgum, are going to focus on about half of that, 500 million acres that are managed by the Department of Interior, which is under Secretary Doug Burgum's oversight. And this Department of Interior does oversee national parks and wildlife refuges. That, I don't think you're going to see national parks be converted over. That's not what they're saying. And I don't think anybody's going to let that happen. But there's a lot of other land that maybe is on the balance sheet. Trump calls this federal land or an incredible asset. Here's Scott Turner and Burgum photographed in the picture with the executive order down below. Trump calls the federal land, an incredible asset. It's on America's balance sheet, and we want to efficiently and effectively steward these underutilized areas to solve our nation's affordable housing crisis. That was actually a Burgum quote. I'm sorry, announcing the task force. And so the partnership between Interior and HUD will identify the lands that are suitable for residential development. Just because you want to build there doesn't mean that it has access to water, and you can bring the infrastructure there. You need roads, you need water, you need electricity. Then what good would a neighborhood be without like jobs and hospitals? And so like they're reimagining what a city could look like to some degree. They're calling these locations, areas that are going to have low regulation, that are going to be able to move fast. Realtor.com's research, you've seen numbers here on this number kind of all over the place. Realtor.com's research is that we have a housing supply gap of 3.8 million units. I think every number I've ever seen is overstated because really it's how many affordable housing units do we need? I would say all of the 3.8 million need to be affordable housing units. Builders right now are sitting over 9 months of inventory. Why? Because they're not building an affordable product, generally speaking. They're building in areas that I would just say don't need the excess of building that is happening there. Okay, there's a ton of building that's happening in the Sunbelt states, and we know that you need building in places like the Northeast and the Midwest and places that don't have as much inventory or have older inventory. Where would these homes be built? This map shows federally owned or regulated lands. The map includes land held in trust for Native American tribes as well. So that's all in the red. That's not considered federal land in every context. It's also not something that I think the federal government's going to get into taking and building land on. So you can take all those red spots out. All right. Look at the yellow. And this is Bureau of Land Management. That yellow land is where you've got the most land. Anything smaller than 23,000 acres are omitted. But you don't see any real opportunities. All that green that's kind of sprinkled around here is Forest Service. So not sure you're going to have much movement that. Like, look, you really have nothing to speak of in the Northeast. That's where you have the lowest inventory. So you're talking about places like Nevada and Utah and, California. And, that's where a lot of this, land that might be available, and might be easiest to just say, hey, we're going to go and take this land and create an opportunity. Okay. So 90% of the federal land is located in the West. So for people who want to live in the West, who, have family ties in the West, this could be a huge benefit, but not everybody certainly is, I always say this number, like, it's 80% of people live within 100 miles of where they grew up. People just don't take a risk of moving out. It's a significant number of people live within 100 miles of where they grew up. So if you grew up on the East Coast, the chances are very low that you're going to go and live on the West Coast. Yet 90% of the federal land is located in the West. And then a significant share is uninhabitable, because of, you can't access because of the terrain, or you need to have drinking water. But those areas that we highlighted there on the map are going to be, the areas. I think Nevada's a boom state. You're seeing it with Vegas right now. Some of the advantages of what the way things have been set up, taxes, all of that, are enticing Californians, obviously, to move Nevada. So listen, they're moving forward. They're taking this step. We'll see what it does. I think when you think about the home affordability in California, if any of this happens in California and certainly Nevada, this could be a good thing for the prices out west. All right, existing home sales. And here's the headline. Maybe it's NAR's fault because they led with the same headline, but you saw this over a lot of mainstream media news outlets, which can be confusing to folks. Existing home sales accelerated 4.2% in February. And if you look month over month, January to February, yeah, that's true. The seasonally adjusted annual rate is up to 4.26 million. But when you look year over year, existing home sales are down. Okay. Existing home sales are down. Remember, this is the peak season of sales. Logan hasn't called the peak yet here in March, so maybe it will extend out. Maybe we are going to see, some improvement when we look year over year on existing home sales. But people kind of read the headline and say, wow, existing home sales went up 4.2%. They don't know that that's month over month, and that you had a January, you had weather in January and this winter, more so this winter, right? Existing home sales, leading into the winter, you had cold weather in the winter. You had some things that slowed it down. You had an election in November. The sales, the sales that happened in January, things, going under contract November, December. Okay. So you had an election, you had holidays at the end of the year that naturally can slow the sales cycles down. So January's numbers were going to be suppressed. Weather, holidays, coming off an election, all those different things can bring January's sale numbers down. And then you're going to naturally get that bump up in February, 4 to 4.2%. But sales slipped 1.2% from 1 year ago. So we're still operating off of really low levels. Month over month, again, is the headline number that a lot of people saw, 4.2%. Does not mean gangbusters. We're still dealing with, a market that has a lot of pressure on it. And there is an advantage to being a seller and, getting out there now in the early spring without having to take the risk of what the end of the spring might do and how much it might bump this number up. A months of inventory is up 3.5 to 3.5 months. It was 3 months last year in February. We know the builders is up over 9. Okay. So there is room for that to grow, which creates a longer sales cycle for sellers and creates pressure on price. The median sale price right now coming in at 398,000 year over year. That is up 3.8%. That number will grow here throughout the year, as it does as we get to the later half of every spring. Another indicator And I'll just go to price as I'm talking about. Another indicator, if you just look at this chart, this is an easy one to explain to folks about the advantage of being on the market early in the spring. Look at these numbers in a given year. Right now we're looking at 2022. 413,000 versus the beginning of the year at 354,000. Well, when did 413,000 happen? It happened in June. It means that those properties went under contract now, March and April. Oh, let's look at 2023. Same thing. The highest price of the year was June, 410,000. Oh, what do you know? June properties go under contract end of March, April, maybe beginning of May if you have a 30-day sales cycle. But over the next 30 days, it's the best time to sell. Who would have figured you have the lowest price at the beginning of the year when you're coming on the downside of the summer into the fall and into the holidays? Those properties go under contract, create the lowest price point. Any given year, you can map this out. 426,000 was last year's peak. When was it? Oh, look, it was June. Those properties went under contract, went into escrow, whatever the hell you call it, in March, in April, in maybe early May. Now is the time to get the highest sale price of the year. You can go back and pull this data on your own MLS and show the story locally. We're at 398,000, and you go year over year for time of year, we're up. So that tells me the peak this year is probably going to exceed the 426,000 on median price of existing home sales. If we go into total existing home sales, again, we're down year over year, 4.26 million versus an seasonally annual adjusted at 4.3. Remember, we got down to like 3.85 at one point last year as sales slowed down. If we continue to see these mortgage rates move down, we might have a longer run on home sales. That'd be the one thing that could be that window of opportunity for this market. Existing median home sale price up again, 3.8%. If we look at the total existing home sale percent, again, down year over year, 1.2%. That's after, gains the previous 4 months. So now we're looking probably, unless we see a real tailwind on rates, probably getting into that time of year where we see those numbers move down. Realtors are seeing a huge increase on these sales. So what are we getting help from right now? It's the first-time buyers as that rate is trending down. You're seeing more first-time home buyers move into the market, 31 over 40, over 26 versus last year. Investors, sales to investors, way down. So first-time home buyers are making up that gap with investors. Investors not seeing the opportunities in this market that they've seen in the past. Cash sales almost flat. Distressed sales up to 3%. That number was trending at 1 for the couple of years prior to that. So that's up to a 3. That's flat year over year though. So not a huge red flag there. Days on market up to 42 versus 38. Regional sales, similar to what we see. Northeast makes up 12%. The West is 20%. Midwest 23%. South 45% of the sales. And you can just see here that the majority of sales are happening between 250,000 and 500. In fact, the vast majority are happening below 500,000. That's, kind of what that JP Morgan Chase analyst talked about a few weeks ago, where it's, the vast majority of sales that are happening under 500,000, that's cost below replacement. And they're very bullish on those types of investments, whether it be commercial at a higher price point or obviously single family would relate to this lower price point. The change in sales by price range, million plus is up 11.5%. 750 to $1 million is up 5.6. 500 to 750 is flat. And then these lower price homes are where you're seeing the change move down. That's based on kind of that unaffordability in the rates. All right. All of that will be available for you inside of BAMX. If you just move into go into school here, get into the classroom tab right here, move over to Hot Sheet Daily Market Slides and Data. Everything that I talked about today is going to be available for BAMX members to grab and use in your text communication, your email communication, your marketing, as well as our Hot Sheet show notes, which is how we bake the cake here on the Hot Sheet each and every single day, all available for you inside of school.com/BAMX. We removed the entire community into one place. No more Facebook spam. There's a ton of spam in Facebook groups that, just gets infuriating over time. You don't have to deal with any of that inside of school. We have a referral tab where everybody can get referrals. By the way, if you're a BAMX member and you haven't used this yet, the map to figure out who you want to connect with on the referral, that map is super powerful. We obviously have our referrals tab here, and there's referrals happening obviously within the group. All right. What's happening with the 10-year as we kick off the week? It is at where it's been at basically for the better part of, I'd say, 3 weeks now. Better part of the last month. We've kind of been hanging around this 4.3 level. Love to see it drive lower into the fours. It's something that the administration is pushing for, a lower 10-year, because they know that brings lower long-term rates, as we've seen over the last 3 weeks since that number has moved down. That 10-year has moved down. It has moved the 30-year fixed down. The 30-year fixed revolves around the 10-year. We ended the week at 6.72. Our Freddie Mac 30-year fixed weekly ended at 6.67 last week. So we'll see where that goes this week. Any more momentum down could bring future, positive reports on existing home sales. We're seeing that with mortgage application right now. How long can we run this out? How much lower can it go? That's something that we'll continue to watch each and every single day here, so we can be equipped with the right information at our fingertips to help our clients make the right decisions moving forward. That's your hot sheet here as we kick off this Monday. Obviously, I'll be with you guys all week, Monday through Thursday, 9:30 on the East, 6:30 on the West. Make sure you're subscribed. It is the best way to, it's this free and simple way to support everything that we do here at BAMS. Just subscribe to the channel. And if you're looking for more information on how to generate more offers, how to generate, in fact, 4 offers on every single listing and get more listings, join me for a free public webinar on Wednesday at 3:00. I will be with the CEO, Kayla from Zoodelio. All of our BAMX members get a free Zoodelio platform, which is a $2,400 value in and of itself. But if you just want to learn more about presenting multiple offers before you even start the listing and how you can leverage this to get more listings, I'll be doing a webinar with the CEO and Zoodelio team for free Wednesday, 3 p.m. Eastern. So I just saw that Haley put a link down below for that. Go ahead and sign up. It's completely free webinar that we're going to be able to do on Wednesday at 3:00. Make sure you sign up for that in the link below. We'll have it in the replay description link as well. All right, there's your hot sheet here to start the week. I will see you tomorrow. Until then, of course, have a great day and toodaloo.